Welcome to this week's Money Questions Answered video. And this week I'm answering the question from Mondise, who asked me, he said he's winding up his father's late estate, and he discovered that his father's old mutual life policy was ceded to FNB. But now that he's working with the estate, he's discovered that the mortgage is actually with Nedbank, and FNB has confirmed that there is no mortgage with them. So can he still use the life cover that's been ceded to FNB to cover the bond with Nedbank? It's really important to understand what happens when you cede your life policy and who the beneficiaries are. First of all, when you cede your life cover, so let's take a step back. You're going to go and take a mortgage out of the bank, and the bank says, we need life cover or credit insurance to cover this mortgage should you pass away. So you could buy the cover directly with the bank, or you could say, well, I already have an existing life policy that I would like to cede to you, which is obviously the case in his father's case. Now, it doesn't mean that the bank now owns the policy. All that means is that the banks have a right to the proceeds of that policy to the extent of the debt. So if the policy was worth 500,000 Rand on his death, but at the time of his death, for example, the mortgage is only 100,000, the bank would only have a right to the 100,000 to settle the outstanding debt. The remaining 400,000 would be paid out according to who the beneficiaries are. So if the beneficiaries were other children or a wife or anything like that, then the proceeds would be paid to them directly. If the beneficiary there was no listed beneficiary, or the beneficiary was stipulated as his estate, it would be paid into his estate. So it's important to understand in this case who are the beneficiaries. So if you think about it, there is no mortgage with FNB, therefore FNB has no right to the proceeds of it. Therefore, the life policy will pay out to whoever the beneficiaries are. Now, if the estate is the beneficiary, the estate would receive the funds from that life policy, and they would use that to settle the mortgage with Nedbank, because that is what the estate would be required to do. If, however, the beneficiaries were the children, for example, and they received the proceeds directly, they are not obliged to settle that Nedbank mortgage. So then the estate would have to say, well, if we don't have the funds maybe the estate already has funds that they can sell and pay off the mortgage, or they may have to sell the property. So it's just really important to think about these things when you are doing estate planning. Personally, I have a life cover that will settle my mortgage because I want to know that my family are debt-free. But I could also have a life policy that was not ceded to the bank and was paying out to my children, for example. They are not then obliged to actually settle that debt. The bank would, in that case, actually have to sell my property. So I think it's just important to understand this and make sure you understand what your policies are doing. And if in a case where your mortgage is now paid off, please go to the bank and cancel that succession. It just makes life a lot easier. And remember, if you want to ask a question, you can post it below or through my website, myourmoney.co.za.